Have you ever wondered where accountants get their information before entering transaction into accounting records? Watch this video to the end because I will show you the document that prove every business transaction actually happened. Hello everyone, welcome back to Excel with Marvelous. This is day 4 of our 90 days bookkeeping challenge. We are learning bookkeeping practical from beginner level. If you are just coming across the video, make sure you watch the previous lesson because every topic connects to each other. Today we are learning about source document. A source document is an original document that provides evidence that a business transaction has taken place. In simple terms, before you record any money coming into or leaving the business, there must be a proof supporting that transaction. For example, imagine a customer buy goods worth 20,000 for a previous provision store. The receipt issued to that customer become the evidence that the sales happen. Without source document, a business cannot properly confirm its transaction. Some common source documents include receipt, proof that payment has received, invoice, show goods or service supplied and amount expected, payment voucher, evidence of money paid, bank statement, record of bank transaction, purchase order, request for goods from a customer. Now let us see how a source document connect with bookkeeping record. Let's dive into the practice. Every transaction has a document supporting it.